So the Fibonacci is a powerful tool that's going to help you measure pullbacks and make sure you get in at a good price so you could take a trade continuation. That is what we're going to talk about in today's video. So let's get into it. All right, so we're going to have the basics on the chart. For me, VWAP and the pivot points, just standard settings, are going to be the basic settings. That's all I need, right? I don't really change anything. I just turn things off. I don't have the band multipliers on. Got the VWAP, pivot points. That's it. That's my basic setup. Bare minimum I'm going to have on my charts. And let's get into it. So the pivot point, these are the settings I use. I'll go into the settings right now so you can kind of set it up. So I'm really looking around 50 to the 618 to the 75. This range right here of these three is where I want that pullback to go. I need at least 50% pullback, at least, to take a trade. And then I have the extensions on so we could start measuring moves past that initial move. So how we're going to use this. So let's use today. I did not trade today. This is my first time looking at today's price action. So let's just analyze it and see if there would have been trades with the pivot or the Fibonacci. So first we need a move down, and we have not had a shift yet. Okay, so there's no shift past this low. Okay, so nothing to really measure. We had this pullback up, and we did not shift, and we're starting to go the other way. So now we're kind of in like this range. Okay, so we need price to pick a side first before we could start measuring. Now, if you're super bearish on the day and you see this false break of this high with this little consolidation, by all means, once we get back below the VWAP, you could start measuring. But personally, I would not, because this could easily just be a pullback to push back up. So for now, there's no reason to use it. Once we break this low, there's two ways to use it now. Let's just zoom in, make it easier for you to see. Okay, so we have that market structure shift and then the pullback. So let's measure this out. You could do the full swing, and we didn't really have a big pullback. So if you were just to use that whole move, we never got to that 50%, okay? Kind of just respected the pivot point. We were below the VWAP, continued melting off. Now, the second thing is we had this kind of went up a little bit and then down. So we could measure that from this high to this low. And that gives us that 50% entry at least we're looking for. So you could have taken a entry here. And like we talked about, we don't really want to see 75% get broken. It can and it will sometimes. So we have to look a little bit deeper than just the Fibonacci now. We have this fair value gap. So I want the stop loss somewhere above this fair value gap. So we have 0.75, we're above that. And we have this fair value gap I'll draw out so you can see. Okay. So I don't want price to go above this area. So that gives me this stop. We're below the VWAP. We're below that pivot point. And we broke out of range. So that's showing, just from my basic indicators, we're looking to have a bearish move. Now, the safe or safer, there's no guarantees, is to have it at that low. And usually this is where I would partial out. Or if you just want to be consistent, this is your setup. If it's over, I always like to be over at least 1.1. And It's at that low. It's a high probability area price can go. Even if we don't break through it, it could come down and maybe just consolidate and then sweep back up, right? Or if there's a stop punt and then it reverses. So this is a good area to take profits. But this is why we have the extensions, because as you can see, if we zoom out a little bit, we went all the way down through this pivot point down to the next one. And you can see, look at where price kind of starts to consolidate. Pivot point right before it, we broke through. Okay. Started grinding down. Next pivot point, we kind of sat around. So you can see these extension levels. Tapped into it, did a little pullback. Kind of consolidated around here, went down, back up. Okay. So these are measurement moves from this initial leg we were measuring. And this just, again, nothing is 100% trading. These are just guidelines to help you anticipate where price can reverse or start to consolidate before the continuation down further. And if you are prop firm trading, you're not shooting for a 6-to-1, right? Not or a 1-to-6. So you're not risking 1 to in return make 6, because unless you can do that every time, your consistency rule is not going to be met. It's not going to be hit, and you're just going to get denied payouts. So, like I said, this is the safe move right here. This is the safe setup. This will get you paid in most prop firms all day long if you use the proper risk management. Don't oversize, over leverage, and then some trades you go down to 1 contract, and then maybe you're up to 10 again, and then back and forth. Just stay consistent, have your risk, and just take the money. Who cares if price goes all the way down? Just take your money and get out, live to trade another day, because that will help you not blow up your accounts. So that setup paid, okay. Let's say there's really nothing here, like there's no Fibonacci setups. Okay, so let's just wait. I don't really trade this time, so let's go to around 10:30 and go to the rest of the day, which it is Friday, so price kind of just stalled out around here. So let's say we're going to start scalping. Okay, well, we came down here, went to the pivot point, we took liquidity, and then we shifted above this, okay? So not only did we have a stop run, but then we shifted after that stop run. So this leg here is what we can measure for an entry now. So if we go from that stop to this high, okay, we're not doing this one because this would have been the pullback that we would have entered this trade on. Again, 50% at least. So let's just say we're going to stick with the 50% entries. This one, you could have got a better entry at 618 or not 75, but 618 is like the golden zone. But sometimes you don't get tapped in. So let's go 50%. Again, we want to be below 0.75. There is a little fair value gap here. Okay. Just a little baby one. Let me zoom in. Okay. So we're below this fair value gap and below 0.75. I'm not at 0.75 because it can be hit. So we're going to go a tick lower, and price really just consolidated. So stop is very small, but the target's also pretty small. So let's say we did that one, just that measured move back to the top of that initial run. Okay, boom. We got hit within 1, 2, 3 candles, right? From entry to exit, and we're on the minute chart. So 3 minutes, boom, you had a 1.8 risk to reward. So pretty good return right there. And if you want to do another setup, let's say you got greedy for some reason, you didn't take this initial one. So let's close this out. Let's do the next setup, okay? So, boom, we had a win, pullback. Now, at this point, after this setup, and we had this pullback, now you could still use this whole run and then readjust to that new high. Okay. And then same thing, we had that little fair value gap there and below 7.5. So if we did that entry at 50 again, you would have got hit in there. We're going to be below 7.5. Go to that top, boom, another 1.82 you would have got. If you wanted to go to the first extension, that would have got hit as well. There you go, 3.6 now. And the one never got hit, but anyways, I like to play within that move because even in choppy markets, this is likely to get hit or at least have a stop run above it, and then maybe it reverses back down. So I just like to play within that initial move. But if I'm in my personal account and I have more freedom to actually trail runners, then I will start to trail the runner up into these areas as well as pivot points and just trying to lock in as much money as the runner allows me to. So try to make this super easy, super basic. Again, you can't just use a Fibonacci on every single pullback and be like, okay, look, went down, up, broke structure. Let's measure this. Boom. It actually played out. But you want a structure break. You want a structure shift, and you also want a stop run. So this actually works because look, stop run, went down, shifted structure finally, measured the move, had the pullback, boom, we ran down to the pivot point. So that is Fibonacci. Again, everything we teach on this channel, one, is educational purposes. You need to be responsible for your own actions. You need to put what we teach into your system, a system that works for you. Not everything's going to work for you, but no one indicator alone is going to help you become profitable. You have to have a system. So risk management, you got to have 1, 2, 3 indicators, or at least price. Like this, we have price action flows, stop, break a structure, then we measure the move. We're below the VWAP, we have room in the pivot points. So all that gets added up to taking a long because we're so far from the VWAP. The probability of it at least running a little bit enough for us to make our money above these highs is there. Then when we flip the other way, okay, we're below the VWAP. We're in between pivot points, so we have room to go down to the next pivot point. Boom, short, pay, right? What I'm trying to tell you is trading's hard. You need to test. You need to figure out what speaks to you. And you'll see if you go through my videos, my system does change. And every time I make tweaks to my system, I see the consistency and the profitability increase. If it doesn't, then I get rid of it and go back to the strategy that I had and then find the tweaks there and build off of it. So you'll see a lot of tools that I use, VWAP, pivot points, Fibonacci, all that stuff, and fair value gaps. That's part of my system that's been sticking around forever. And I just make tweaks here and there to see, does that increase my edge? Does that increase my consistency? Does that increase my profitability? If yes, we're going to bake it into the system. We're going to add the rules, and then we're going to start trading that. If it doesn't, we tried it. We got some data, not working. Go back to what works. And that's something that a lot of people do, not in trading, but in life. So for example, I like motorcycle racing. They build a base setup, and then they start to tweak it from there to see if it's going to help the rider. And if it doesn't, they go back to the base setting, and then, okay, we're like, we have solid ground here. Let's make some tweaks and adjustments from there. Do we have a better system? Cool. If yes, we're going to use it and then go from there, right? So show up to the game every day. Be resilient. And If you want some more motivation, all that stuff on TikTok, not only do I have the Fund and Trader account, but I also have this brand called Radiant Resilience, where it is motivation and just growth mindset and helping you just be resilient and keep showing up every day. And if you could support me over there on our TikTok accounts. Also, the fundandtrader.net is up, website's up, all of our affiliate links, all of our products, the course, the indicator, the playbook, all that stuff linked down below, fundandtrader.net. Check that out, and I'll see you in the next video. Subscribe, click that thumbs up, and peace.
Like and subscribe.